That's right. So we have seen roughly $700 billion wiped off of the cryptocurrency market. So this Bitcoin slide isn't just Bitcoin now, it's other cryptocurrencies as well. There are a couple reasons for this drop that we're seeing. One is just general technical selling. Once Bitcoin went below 6,000, it's really sort of tumbled from there, and it's struggled to get back above that $4,000 price level. A lot of people saying that's just because algorithms say at this point, sell. Regulatory concerns remain a big issue with Bitcoin. We had a report last week that the SEC is investigating that drop in December of last year, where it almost went up to $20,000. That's, of course, going to affect people's sentiment about the stock. And then one other thing to look at here is just the general lack of demand. A lot of retail investors have been completely slammed who thought that maybe they could make their fortune in Bitcoin. Now they're seeing that this is turning out to be very volatile. It's very, there's not a lot of certainty in this trade, so not a lot of people getting back into this market at this point.
Rebecca, tell me something about Bitcoin we don't know. I mean, I almost feel like it's like on a cigarette packet, smoking can kill you and damage your lungs kind of thing. It's like Bitcoin is based in really good technology that will be really great one day, blockchain. I feel we have to get that bit over and done with before we get to the real juice.
So the real juice is that actually Bitcoin is based in wonderful technology, but that wonderful technology doesn't have value in it. You've got a dispute going on between the hardware and the software at the moment. If you like the markets and then the hardware producers, so the miners, the people who actually produce the Bitcoin coins, who issue those through their software. So you've got this kind of splitting, forking of the currency itself between these two camps. If you like, the software and the hardware arguing with each other. And the trouble is, meanwhile, it becomes very difficult to keep all of the roots traceable as technology develops. So the wonder of technology is actually almost creating its own demise, in that it's creating a situation where the technology has become so complicated it becomes very difficult to use as a security, which was its very purpose. It becomes difficult to do that because they can't trace everything all the way back. So, I mean, I was reading something the other day about somebody who'd invested in 2014. They had to make a case to the SEC, a regulator now, about the provenance of their currency, and they couldn't, because it's a bit like you put your photos on a zip drive or something like that and you lose the zip drive and your photos have gone. This is the same thing. It's electronically. They've put something in a blockchain somewhere and they can't find it anymore.
These are the smart people,
and these are the smart people. So,
wow.
so the trouble is that if you have a currency that's actually largely based on sentiment, it's not rooted in the real economy, it becomes very difficult for it to maintain its value once sentiment starts to slip and once the clicks start.
Let's get some more questions in.
I was going to ask you about the real economy and how it is impacting Bitcoin, because don't forget, we were in an era where there's so much cheap money around. When Bitcoin was at its best in 2017, the markets were showing euphoria, credit was everywhere, and the whole psychology was just put money to work. Wherever we can find yield of return, put money to work. 2018 has been very, very different. We have seen question marks about the pace of tightening from the Fed. A lot of money's come out of a lot of different areas. Do you think that's been one of the reasons why Bitcoin has been somewhat volatile as well?
I think that's absolutely the case. I think what we've seen this year is that because we've started to see a near normalisation, or a road to normalisation for financial markets, interest rates have started to go up. We started to see more liquidity in the market. Banking profitability has started to go up. So there's been more orthodox returns there in the marketplace. It's been easier to make a play with the liquidity that's in the market rather than using alternative investments.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.